Hey guys, Jimmy Vercellino here, mortgage loan originator specializing in VA loans, and I'm going to give you a recap of what took place in the markets this week, and most importantly, how it affects or impacts VA loans. So no denying it, no sugarcoating it. There was blood on the streets when it came to mortgage-backed securities. And so for my veterans watching this video today, mortgage-backed securities essentially is what impacts mortgage interest rates. So why did mortgage interest rates go up? That's a good question. So if you rewind the clock back, essentially 2 weeks ago, Fed Chairman Jerome Powell gave his testimony after the Fed paused a rate hike. And he said two things in particular that I think is important as us and veterans, or I should say we as veterans and active duty military service members are considering purchase a home. Here's what he said. Number one, he said that the Fed is going to keep rates higher for longer. Right? Market didn't like that very much. The second thing that he said is there was a possible rate hike that was coming down range again this year. Market didn't like that either. All right. So if you fast forward over the last probably 2 weeks or so, we've seen the market sell off roughly 200 basis points, which in many cases has pushed VA rates across the board into the high sixes or even high sevens, depending upon how the rate is structured. Good to go. So I think it's important for us to know that. And today there was a jobs report that came out, I think today's date, October 6th, that came out stronger than expectations. So what does this mean for us? I think it means that there's a strong possibility the Fed could increase the Fed funds rate one more time this year, which simply stated could be necessary to bring down inflation. Remember, the Fed is wanting to reduce inflation. The Fed's target inflation rate is 2%. Right now, we're still well above that, and inflation continues to kind of remain stubbornly high as a result of economy that continues to pick up steam. And this was indicated by the jobs report that came out once again this morning, stronger than expectations. So where do we go from here? Right? That's the question that I think we as veterans and active duty service members need to be answering. Number one, you could press pause on your home ownership goals, and that's perfectly okay and understandable because at the end of the day, you as the vet need to have a piece about the decision that you're making, right? So that's the first thing. You can sit tight until rates come lower, or if you are in a position to purchase a home and are unsure as to whether or not you should, well, what should we be looking at then? And I think with this market, it certainly presents challenges for veterans and active duty military. Certainly no denying that. However, it also presents opportunity. And one of the things that I've learned is that's the essence of life, opportunity mixed with difficulty. So where is the opportunity here? Well, I think that the opportunity lies in the opportunity for you as the veteran or active duty service member to negotiate with the sellers. Meaning this, that if you go to purchase a home and you say, hey, Mr. Seller, I want to buy your home. They say, Roger that, right? I want to buy your home, but I also want you to cover my closing costs and prepaid items in order to get a more effective, or how should you say, better deal, simply stated, on this purchase. So with this opportunity, or with an increased rate environment, that allows you to negotiate more favorable terms in conjunction with the financing, using some of those monies to buy down your interest rate, get a lower monthly payment, and keeping in mind that when rates do end up going lower, you will be perfectly positioned to refinance your mortgage. And in addition to that, there will be more buyers flooding back into the market when rates go lower, which could, as a result, push home values up moving forward into the future. Remember, veterans, if you zoom out long term on mortgage interest rates, you'll still see that mortgage rates in the high sixes, low sevens, even 8%, historically speaking, are still much lower. When you compare them to pre-pandemic or pandemic levels, they're much higher, right? But we have to keep in mind that that was an anomaly that took place, kind of a once in a, lifetime opportunity to get a sub 3% interest rate. That simply stated is not the market that we're in anymore. We do know that interest rates are cyclical. They go up, they go down, depending upon what key economic reports are filtering into the economy. but I do think at some point in time we will see inflation go lower. When exactly, we don't know. So if you have questions about what's taking place in the market, how it affects you as a veteran or active duty service member, I always want to remind you that I'm here to be a resource. I wanted to spend some time talking with you a little bit about what's taking place in the economy so that way you can be better educated and equipped, ready to prepare, or ready to proceed when the time is right for you to purchase a home. Jimmy Vercellino, if you have questions, feel free to email me, Jimmy@VALoans4vets.com. Talk to you soon.